Do you know what an IUL is? Well, by the end of this video, you're going to have all the facts so you can make an informed decision before you sign on the dotted line. My name is Gail Longnecker. I've consulted with hundreds of executives, entrepreneurs, and engineers in the area of life insurance. For the best IUL advice, subscribe to my link below. Make sure you hit that notification bell so that you're alerted when I've got new videos. Now, an IUL is simply a type of life insurance policy with a death benefit. All life insurance is a contract between the proposed insured, or the one who's being insured, and the insurance company. So when there's a death that occurs, there's a death benefit paid out to the beneficiaries or the family or the heirs, whoever the contract is made with. So the fact that it has a death benefit as just a life insurance contract is definitely a component of an IUL. IUL stands for Indexed Universal Life. So an IUL is also insurance for life. It will continue to pay and continue to protect you and have a death benefit available until the very, very end of life. That's contrary to what term insurance is, which is usually just a term of 5, 10, 15, maybe 30 or 40 years. So an IUL is a permanent life insurance policy that will insure you all the way to the end of life as long as it's in force. An IUL also is a type of life insurance, not only with a death benefit that will insure you for life, but it also has something normally called living benefits. Living benefits are the way to access that death benefit before death. Normally, there's 2 or 3 ways to access that death benefit, and that's in the event of a terminal diagnosis, a chronic diagnosis, or a critical illness. Now, make sure you look into my other videos when I describe those more in detail. But an IUL normally has the features of living benefits as well. Do leave a comment in the section below and tell me what kind of IUL you're looking at or what kind of IUL you have. Let me know if you have living benefits or not on your policy. Also, make sure you check out my other videos, for example, IUL versus 401k or IUL versus whole life. Now, an IUL also has a minimum premium and a maximum premium. What, you say? How can that be? How can one policy have a minimum and a maximum premium? Well, I'll tell you how this works. Is every premium dollar that comes into the policy, there's a small portion that covers the cost of insurance. That will carry your death benefit to the end of life. Now, there's also an ability to overfund the policy, and this is your investment piece. It's a really wise way to invest. This overfunding portion used to be unlimited until the government saw that many, many rich people were taking advantage of this and creating perpetual tax-free income. So in the 80s, the government put a limit on the amount of overfunding that can go in these types of permanent life insurance contracts. Now, you know, when the government is limiting something, it's got to be pretty good. So an IUL has a minimum and a maximum premium. Let's talk more about the index portion of an IUL. After all, an IUL is called an Indexed Universal Life. So the overfunding portion of the premium dollars that you put in is actually not buying stocks and bonds on the market. They're actually just looking at an index such as the S&P 500. So let's say today the S&P 500 is at 1,000, and you chose an S&P 500 yearly or an annual point-to-point index. So from today, we're going to mark forward 1 year, and in 1 year, we're going to look at that index again. So if the index today, such as the S&P 500, is 1,000, and in 1 year, it's 1,100, that's a 10% growth, and the overfunded portion of your policy is then credited 10%. Now, how this works specifically is that the life insurance company is actually buying an option on that index with the money that you put into their general fund. If the index rises, they will exercise the option and give you your proceeds or your credit on your policy. If the index, however, is decreasing or negative, they won't exercise their option and you actually don't receive anything. This is called the floor. You'd be very excited in a market of minus 10, minus 20, or minus 30% if your money were just to hit the floor. It's a way of protection that an IUL presents itself. The less exciting piece of an IUL is the fact that it grows tax-deferred and you can access all that cash tax-free. Many, many people use this as a very powerful wealth creation tool for themselves. Let me say that again. The growth in the policy grows tax-deferred, and you can access all that cash tax-free. If you would like an Indexed Universal Life or an IUL policy for all these benefits, including how to invest money wisely, how to protect your family with that death benefit till end of life, and also for all those important living benefits, then click on the link below to become my client. If you like this video, make sure you give it a thumbs up and share it with a friend. Thanks for watching. And remember, I'm in your corner to help you build wealth your way.